All right, June CPI data is due out tomorrow. That's the same day that big bank earnings kick off with J.P. Morgan, Citi, and Wells Fargo results. For more on those markets, we want to bring in Ed Yardeni. He's the president of Yardeni Research. Ed, how are you feeling about things right now?
I'm feeling pretty good about bank earnings. I think loans have started to improve. There's obviously been a lot of activity in the capital markets. The equity market has had a great rally. Wall Street's pretty good at trading these rallies, so I think we're going to get surprisingly strong bank earnings, which was at the stage for a very good Q2 earnings season.
Do you think, I mean, we've seen the markets come back in a really big way, something like up 16.5%, 17% from the lows back at the beginning of April. Are the markets in a position to trade even higher if earnings come in better than expected, maybe with some I don't know what the outlooks will show you, but if just the numbers themselves are better than expected?
Analysts have been cutting their estimates pretty significantly.
And what is it, 5%
for weeks?
maybe?
It's 3.5% now on a year-over-year basis. I think it could be twice as much, maybe 7%. Same thing happened in the first quarter. I think companies have proven to be remarkably resilient on the earnings front, because the economy has been remarkably resilient. So, yeah, I think it's possible that better than expected earnings will
But
boost
first quarter, we got better than expected earnings.
Yeah.
The outlooks were very muddled, and that didn't help the street much, just because people said, we can't predict the future. We can't tell you what's going to happen this year. If we get the same thing, the results are better than expected. But there's still a lot of uncertainty because we don't know what the final tariff situations will be. How does the street react? Well,
the uncertainty is in fact all about tariffs, as you said. And I think the markets have gotten used to that uncertainty. The president obviously on a daily basis can change his mind about what happens with tariffs. And a lot of what he's doing is viewed as negotiating tactics. I think this whole issue will more or less pass by the end of the summer. I think the administration surely recognizes that they can't really afford to take a risk of pushing the economy into recession later this year into next year when the midterms are not that far off. So I'm in agreement with the market's assessment that this too shall pass and that the tariff issue will be resolved to a large extent.
What do you expect beyond just the bank earnings that we start to get this week? Are you looking towards the tech earnings? Where else are you kind of focused on this? And what other inflation numbers or other data are you looking for?
Well, I mean, clearly the CPI up ahead here is very important. I think, we've all been surprised by how low inflation has remained despite the tariffs. But we may see that there is some signs that the tariffs are boosting inflation, or at least that inflation is not coming down anymore. So, for example, the CPI, based on the Cleveland Fed's inflation nowcasting, is anticipated to be up 3% on a year-over-year basis, which isn't terrible, but it's up from 2.8%, and it's not 2%. So I think the Fed remains on hold, partly because their inflation concerns will be somewhat validated by some of the inflation numbers up ahead here.
How much higher can the market go if you do get these good earnings, if you do have, let's say, inflation that's not terrible?
Well, exactly 6,500.
Yeah, well, 6,500.
Isn't that your target?
Exactly, 6,500.
You can't hit it exactly?
I'll try.
You could change it to 6,501.
Yeah. I don't change that often, Joe. You know that.
Well, you were at 7,000. You should have stayed there, probably.
I started out at the year 7,000, but I think 6,500 is achievable by the end of the year. And I think it's achievable because earnings will continue to surprise. The valuation multiple, obviously, is back to being stretched at basically 22 times forward earnings. The Magnificent Seven are leading the pack again with a very high multiple. So I think what the market is signaling is the perception that we may not get a recession after all. This has been the most widely anticipated recession of all times for the past 3 years. It didn't happen when the Fed tightened. It doesn't seem to be happening as a result of the tariff turmoil. And so if the economy is resilient, if earnings are resilient, then I think the bottom line is the valuation multiple can stay high.